here's a shocking truth. The stock market just hit record highs, and it's all because investors are betting on something that could dramatically shift the economic landscape. But here's where it gets controversial, guys. While the S&P 500 and Nasdaq soared to unprecedented levels, it's not just about numbers. It's about the Federal Reserve's next move and what it means for your wallet. Let's break it down in a way that even beginners can grasp. On Wednesday, the S&P 500 and Nasdaq composite reached all-time highs, fueled by optimism that the Federal Reserve might cut interest rates in September. This isn't just financial jargon. It's a big deal. Lower rates could mean cheaper loans for businesses and consumers, potentially sparking more spending and investment. And this is the part most people miss. While mega-cap companies like Amazon and Tesla led the charge, the real story is in the broader market dynamics. 10 out of 11 S&P 500 sectors climbed higher, with consumer discretionary stocks leading the way. Even small-cap companies, often overlooked, saw a boost as lower rates could help them refinance debt and grow. Traders are now almost certain the Fed will cut rates by 25 basis points next month, according to the CME's FedWatch tool. Thomas Hayes, chairman at Great Hill Capital LLC, put it bluntly. We're pretty much certain that we'll have at least 25 basis points of rate cuts in September. But why the confidence? Recent data shows that U.S. tariffs haven't fully inflated consumer prices, easing fears about inflation. Plus, a weaker job market and changes at the Fed have tilted the scales toward a more dovish stance. Here's the controversial bit. Not everyone agrees this is a good thing. Some argue that cutting rates now could lead to overheating in the economy down the line. What do you think? Is the Fed making the right call, or are we setting ourselves up for future trouble? Let us know in the comments. Meanwhile, the CBOE Volatility Index, often called Wall Street's fear gauge, dropped to its lowest level since January, signaling calm in the markets. But don't get too comfortable. Investors are still watching closely. Remarks from policymakers, especially Chicago Fed President Austin Goolsbee, could shake things up, and earnings reports, like CoreWeave's larger-than-expected loss, remind us that not every company is riding the wave. Speaking of waves, Paramount's Skydance made a splash with a 19% jump after securing exclusive broadcasting rights to the Ultimate Fighting Championship. On the geopolitical front, Donald Trump's virtual meeting with European leaders about the Russo-Ukraine conflict adds another layer of uncertainty. The market's record highs are exciting, but they also come with risks. What's your take? Share your thoughts below. Let's keep the conversation going.